And so after a brief green day yesterday, Bitcoin and crypto markets are back in the red. Bitcoin down 4%, and things will not improve until this one metric, which I'm going to go through with you today, will signal the green light for when Bitcoin and crypto markets are ready to respond. We're going to go through that in detail. We're going to look at the Bitcoin chart to find the key levels and what is going on in the chart. So smash all the likes. Don't forget to subscribe. As always, check out the links in the description if you want to buy any crypto. Now, as you can see, yesterday, a nice big green day, the day after FOMC. A lot of people wondering what is going on. Why were the markets rallying? And I came out yesterday in my update while I was traveling to say, guys, do not get caught up in these green candles. Do not get too excited. We did not get good news. So if the market wants to have a little bit of a rally, good for you. It's okay to have a little bit of a green rally every now and then. But the question is, what is the longer term trend? And the longer term trend continues to be to the downside. And Jerome Powell's Fed talk didn't give us any reason to be bullish, right? The markets are not in good shape. He wants to hike rates for longer and deeper, and things aren't going to be great with a terminal interest rate of 4.6% now projected for next year. So, as you can see, today things have come back to reality today. 4.26% down here on Bitcoin, back below that 19,000 level. But more importantly, if I go here into the 4-hourly, you will see that not only have we broken back into our triangle, but we've cleared back below this green line here, the bottom of our channel at 18,700. So we really have started to lose that level. Now we look to the bottom of the triangle at 18,300, 18,400 range for support. We bounce once, we bounce twice. Will we bounce again, or are we creating this M pattern with a price target to the downside? Remember, the price target first and foremost is to reach the lows, right, of 17,600, the previous lows from June. But thereafter, maybe the technical target of this will bring you even further down into that 17,000 flat region. So that's what we need to watch out from here is, are we going to hold the 18,300 range we've held twice before? Now, if we switch on over to see how are the markets doing, we can see that US markets are not doing great whatsoever. We know we're heavily correlated to this. I'm going to come on to what is causing some of this pain very, very shortly, but you can see that the NASDAQ is down 2%. Why? What is it? It's going to be down to this metric, which share with you and break down for you, and a lot of crypto people are not explaining exactly what is going on, so I'm gonna have to break that down for you guys. S&P down 1.7%. Even the Dow Jones, the blue chips, are down 1.4%. So who are we to not expect a 4% down day here on crypto, which is considered the most volatile asset class there is? Fear and greed index back into that extreme fear low level here at 20. Just to remember, it wasn't long ago that we were sitting up in the 40s again as that FOMO was starting to kick in. Now the market's been thrown back into extreme fear as we are now not sure how much lower we could be going, right? Are we going to head to that 17,600? A lot of people are scaring people and shouting out 10,000, 12,000. I'm not going to that extent, right, guys? You guys know I would just show you what the data is showing me. And right now in the charts, my levels are very, very clear. I've got a clear level here that we could be heading to 17,600. Understood. Technical price target could bring you down to 17,000 thereafter. And then you've got some support at 16,240. So those are the levels I want to hold for now. And as and when data tells me other price points, I will let you guys know as and when that changes. But it's not helpful for people just to shout out that Bitcoin's going to go to 10,000, 11,000, 9,000, 8,000. How is that helpful? Let the data lead you. Let the data give you these price targets. And when it does show you that, then you can't be in denial. You've got to be ready for some of those key levels. Let's just take a quick look at the US 10-year, and you can see the US 10-year Treasury has spiked up. We're now sitting at 3.7%. I'm going to show you why this is really, really important. But just so you guys know, this now means risk-free, you can get 3.7% return on your money in US Treasury. So don't be surprised to see a lot of money now flowing into US Treasuries from people who normally put them in stocks, normally put them in crypto. It's a great return to be getting 3.7% on a 10-year Treasury, especially when Jerome Powell has just said that real estate could be seeing a correction soon. I can imagine a lot of funds which may have gone to real estate, may have gone to stocks, may have gone to crypto, will start rotating across into the risk-free Treasury. So do not be surprised to see that. But let's get into this. What is the main chart that I want to share with you? And what I want to share with you is, first of all, and I'm going to explain the detail behind this, is the trusted dollar index. Okay, we've got to look at this dollar index. But before we do that, you need to understand that this morning, the first thing I tweeted and put in the Telegram group is that the dollar index means business today. And you can see it did not mess around whatsoever. I tweeted it at about this point here. You can see we're having a big push up and it just kept going. And it is unrelenting right now, 112.49 here on the dollar index. And when I zoom out here on the daily chart, look how strong this daily candle is, guys. Really powerful move from the dollar index. And why is this an issue? We need to understand what is the dollar index and why is it moving? First thing we need to understand is that the dollar index is inversely correlated to crypto. Now, why? Why is that the case? Well, the case is that the dollar index is considered as a risk-off move. Dollar index tends to move higher when risk is off. When risk is off, people don't want to invest in growth stocks such as those in the NASDAQ, nor do they want to be in risky assets like crypto, okay? They want to go to the US dollar. They want to go to the US dollar so they can go and do something like this and get 3.7% risk-free on their treasuries, okay? Now, let's understand, because we know that the dollar is inflating, right? We know inflation is still high in the US, therefore, why is this dollar getting stronger? We need to understand what does dollar index actually mean. And you guys can go ahead and pull up the definition, but it's a weighted geometric mean of the dollar's value compared to a basket of other currencies. So a huge mistake people are making is, why is dollar getting stronger? It's not getting stronger in absolute terms. It's just getting stronger compared to the basket. And what's in that basket? This is where the key is. It's the euro, 57.6% weight. Japanese yen, 13.6% weight. Pound sterling, 11.9% weight. But guess what? At least the US did 75 basis point rate hike. Euro has worse inflation in the Eurozone. The pound, UK, where I'm at, has worse inflation than US. We just did only 50 basis point rate hike. So what you're seeing, and I want to make this very clear so everybody understands this. I know this is not crypto, but this is not a Moonboy channel. I'm here to show you exactly what is moving the markets and what actually matters. If you guys want somebody to just show you a quick Bitcoin chart and a head and shoulders pattern and that's it, wrong channel, wrong channel. We're going to go into the macros. We're going to understand exactly what's going on. So dollar index is soaring. Let me now flick that across. This is what's happening to the British pound. The British pound is now almost at parity to the US dollar. Let's put this into context. Let me put this on the weekly chart so you guys can see. This is what you've seen here on the pound, okay? This is horrible. The pound is in a big problem here versus the US dollar. Let's pull out the same for the euro. Exact same. In free fall. The British pound, the euros in free fall, allowing the US dollar relatively, the Dixie relatively, to be a safer hedge. So more people are moving across into dollars. Dollar index is showing strength. US treasuries are doing well. Risk off mindset right now. That is not looking good for crypto. That's what we're in. And until we see this start to improve, and I said this time and time again, until we see this dollar index here on the daily chart at least come and contend with its EMA ribbon, and more importantly on the weekly chart come and contend with this EMA ribbon, we will not have a sustained run on crypto. Now, of course, on this daily chart, if dollar index has a couple of bad days like we've seen here, everybody gets excited because Bitcoin goes on a crazy run. Same here. Same on that day yesterday. Bad day for dollar index, okay? And crypto went on a run. Nothing surprising. I don't care about individual candles. I care about the trend. Who owns the trend? Dollar index owns a trend, not Bitcoin, okay? So it's really important that we keep our risk off hat on, get prepared for lower prices, and we understand. Let's not get caught in the FOMO of days like yesterday chasing those candles. That is the quickest way to get wrecked, is when you see a crazy day like yesterday, Bitcoin running 3-4%, and you FOMOing in chasing those green candles. In this community, we do not have green candle disease. We will buy from positions of strength and we will sell from positions of strength. We will not let market shake us in, nor shake us out of our high conviction position. That is the key. That is the key. And that's what we're seeing here on this really important chart here. Yes, we can get a calling off here, but the more important catalyst will happen here on this weekly chart. When does this cross over? This may be in March next year, right? This may carry on, and this may, and albeit it'll have a couple of weeks, but I mean, it'll hold the trend above its EMA ribbon, maybe into Q1 next year. But when that flip happens, just like here, when that flip happens like this, or like this, that is when Bitcoin goes on its massive runs, and that's what we need to prepare for right now. And the fun thing is, this run-up has been so extreme that the collapse can be just as powerful to the downside, allowing for a big, explosive move to Bitcoin. And that is why we're invested in crypto ultimately. A few other things I do want to share with you guys. This was shared by Willy Woo, big popular guy over at on crypto Twitter. And he shared the Bitcoin cost basis density map. But more importantly, we want to focus on this blue line, which is the supply in profit. Now, a lot of people, including what Willy Woo's saying here in his tweet here, is saying we've only reached 52% here. So let me just pop me out the way. You go over there, mate. We only here where my cursor is, we've only reached 52% of supply in profit. Previously, the bottoms were 61, 64, 57. Now, my argument is we're pretty much there, right? Yes, you can argue, is there a couple of more percent to be had here? But each cycle, you wouldn't be surprised to see if this goes higher and higher, okay? So it's okay for this percentage to slightly increase over time. A few other interesting metrics to look at is we do want to look at the number of active addresses with more than one Bitcoin, okay? Let's not neglect this. You can see here, this is climbing and climbing and climbing because now that you've got Bitcoin at 18,000, 18,500, that means it's more accessible for people to go and get their first Bitcoin. People actually going out there with ambitions of saying, you know what, I can now finally buy 1 or 2 Bitcoins when previously it was a pipe dream for me to get anywhere close. This is allowing more and more people to go and accumulate their favorite Bitcoin. Another interesting metric to look at is the net realized profit and loss adjusted for market cap. Now, what this shows you is that the net realized loss is at these peak levels, right? We've seen the previous bear markets. These are the kind of levels you reach to. So it's not insignificant where we're at. Now, some people are arguing, is there more squeeze to be had? And yes, potentially there is, but we have had a lot. And now we just need the macro economy to start improving. We need to see inflation come down. We need to see that Jerome Powell starts pivoting. Will that come in March? Will that come in April next year? And then things can get exciting again in the crypto markets. So there you have it, guys. There is your quick update on a Friday. If you appreciate this type of content, make sure you smash up the like button. Make sure you subscribe. If you like these succinct videos here in a 10-minute update once a day, let me know that's the format you like. Don't forget to check out the rest of the links to our community features, such as your Telegram group, which is free, the Discord, which is free. Make sure you get involved, guys. Skillshare course, full TA course for free. That would normally sell for thousands of dollars, guys. Skillshare, check out the links in the description. Make sure you watch through that. I teach you what a head and shoulders is, how to use the EMA ribbon, the Bollinger Bands, which we didn't go through today, and various other different things which are really useful in your crypto journey. Hope you guys enjoyed. Don't forget to go watch this video here, and I'll see you in the next one.